Hello, hello, hello. It is the beginning of the weekend, but before I can kick it, let's take a look at what we had going on this weekend, the price actions, what we have set up. We'll look at the majors pretty briefly here, and I'll try to put these charts up on the blog. They'll be under charts in play. Finished the week up a little bit over 100 pips. Slow, but up almost 500 pips for the month, so things aren't going bad. And if you want to check more into that, check out the blog. And let's first look at the EURUSD. You can see the EURUSD basically took the week off, as did the Great Britain, and that's basically, I guess, because everybody in Europe is on vacation for the week. It seems to be the theme. Things just shut down for the month of August. Well, let's take a look though what we have going on here. We can see that the pair sat in a very narrow range between 130, let's just say 133 and 134.50, and until we get a break of that range, there's really nothing to do. And I don't mean just a little poke higher than that. We need to get a close above that range, daily close, and then we can get things moving. Get a break above the 134.10. It favors a move back up towards the top of the range, first going 35, 137.10. But if we break above this low here, let's just move this chart, this level right down here so we can see it. Get a break of this 133. Let's just put them all right in the right places. Get a break of the 133, then it would favor a move further down, and we could see another test of the 132 level followed by 130 and so forth. But until we get that, there's really nothing to do in this pair. I mean, you have to look for the extremes. It's very dull, it's very boring trading, but you can see until we get volatility, there's really no reason. Just that when the longer you have money sitting out there, the longer you have, the more risk you have. So the more exposure you have, with more exposure to the possibility of losses, would increase your chances of losing money. So I like to limit my exposure and pick my battles, open and close trades as quickly as possible, and get the pips I can when I grab them. Let's look at the Great Britain USD. This is a very similar part. You can see that this trade, a trade between 155.40, let's say, and we had the top of the range at 157.17 this week. And until we get a break of either that, either one of those two, it's and starting out to the middle of the week, want a break of the weekly range. Here, let's throw some lines in there so we've got to look at it. A break of this beginning weekly range, I wouldn't touch this baby, because we could easily just pivot around in there again. The cross doesn't seem to be in any particular rush to head pretty much anywhere. So I would wait for a break of that range. If we get a break, or if we get a bounce here, you could get a push back up towards the top side, and in the favor, a push up towards the 157.50. A lot of people are talking about specific fib levels here, and that's why the pair decided to rotate back down. I'm going to be honest, I'm not 100% following that, or I'm not following it, but I'm not 100% buying it. You can see the process, as I said last week, since the move down touched that 50 fib, it has been done nothing to go higher. I guarantee, let's throw this down on a 4 hour, we'll move to what, we're not even have to go 30 days. You can see that the pair did break what looks like the ascent. No, the pair is right at the trend line here. So until we get a break of that trend line, which it looks like, until we get a break of that trend line, there's really nothing to say or do here. This pair is still biased higher, and I guarantee that this pair will close. Well, I don't guarantee, but I bet this close will just ride this out until the end of the month. So, this will be something we'll have to watch right into the beginning of next week, is this trend line, and see how the pair reacts to it into the beginning of the week. And if we can get a break of that, then it would favor maybe a continued move higher. But if we bounce back off, we can maybe get a bounce up to the 157.50 level. Let's take a look at the Aussie. The Aussie is pretty much the same story as same story as last week. As I said, that as long as the pair remains, it doesn't break this 93.20 level, still making lower lows and lower highs, because we can see we have a high, low, high, lower low, lower high, low, and now it looks like we have another lower high, and now we need to see a break in this, and that this triangle will probably dictate it. If we get a push back above this triangle, we could break the momentum, and that would be the end. Break the momentum. We'd probably break this 93.20 level, and then we can maybe get a push higher, and I wouldn't even look out of the picture for a move up to the 97.14 level at that point. But if we break back down to the bottom, we would definitely have a chance to go down 86.40, 87.80. So watch the triangle, watch the top, watch the bottom. Look left, look right, and well, that'll be giving our dictator what we're going to do. Let's take a look at the New Zealand. You can see this baby looked exciting trading. It was exciting trading, actually, to tell you the truth. Basically, in 5 days, when we left last week, it was testing right at the top of this range. Looked like it was going to break. It did look like it. I mean, it pretty gave every indication that it broke. It pushed 81 all the way up towards 81.64, and then it reversed course sharply, and it didn't look back. The pair just went down, 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 followed it. Most of this trading happened in Asia, and that's the only time I don't really trade, so I missed most of the action on this. But it's interesting now, though. The end of the week, it's right back at the bottom of this range, so we're going to see what it does. If it does all blue candles next week and goes all the way up to the top, that would be amazing, but we'll probably see a little bit of consolidation at this point after a drop like that, and I'll at least look for a move up to the 50 fib, which if I look just eyeballing this here, it looks like it comes around the 79.50 level. Well, if it moves back up to the 50 fib, that would be the level to watch, to see if we get a bounce back down. Then we could probably see it push lower. If it breaks back up, though, at the top of the range, hey, isn't that a question? We'll have to see. And it looks like we could probably throw a line there and try to convince people that we're in a new channel heading higher. Just something to keep your mind on. I'm not even putting that on my chart, but just keep your look at. Keep looking at it. The USDJPY, you can see this baby is still in a triangle until we break that triangle. What can you say? What can you do? We have a top there. We have a bottom there. That's about it. And I mean, I could even make the triangle even more compact if I wanted to. Do something like that. You know, blah, blah, blah. There's a million different ways to draw that. Basically, we need a break of either this 95 level or the 93.20 level to really get things exciting. And we can see finally some action in these yen pairs, which have just been boring the crap out of me. The EURUSD is almost an exact replica of that pair in that trade. And then the more exotic crosses, the Euro, New Zealand, Euro, AUD, so forth. The New Zealand pair has obviously been moving quite well over the last few weeks. That's the stuff I normally actually trade, are the New Zealand crosses, the Aussie crosses, and some of the yen crosses. And I like them because they have quite a bit more volatility than the majors. All right, everybody. The charts will be on the blog. Check it out. If you want to sign up for next week, do it over the weekend, and we'll be going next. We'll be rocking and rolling on Monday. Everybody, have a great weekend, and keep it safe.